Audio morning brief for the U.S. stock market, 8:04 a.m. Eastern Time, January 31st. I'm Rich Paz for Critical Points. So the funds are winding down another month, and it is Federal Reserve meeting day, FOMC meeting. It was yesterday and today, and at 2 p.m. we will see their result of whether or not they're raising interest rates, and I think nearly 100% of the marketplace is betting they won't. So if they ever did, it's probably going to be a shocking moment, big downside, and I don't believe they'll do that. I don't see any reason why they would do that. You'd really have to question their thinking. We'd seriously have to question their thinking. Now, they also put out a text, and the computers are going to analyze that text and I mean computers of Wall Street are going to be analyzing that text to see how much has changed from the prior month. Is there any signals there for them to become bullish or bearish on the stock market, economy, and whatever? And then after that, Chairman Powell will speak, and it's probably, once again, Powell's speech and questioning and answers that are probably far more important than anything else that we're going to get out of the Fed today. And then we'll see by the close of the day of what the market thinks of all of that, all right? And all of this starts at 2 p.m. Eastern Time today. Now, Monday, once again, we saw some traders, some market participants did not show up for work. And is really lesser demand than I thought as we get more data and look at the hindsight. But they did power the market higher. They even kind of like panic bought at the end of the day, but it wasn't necessarily top-notch demand. And the sellers were just basically just watching the market, and it made it easier for bulls to push it up. So yesterday, the market consolidated. It really couldn't follow through, and that was rather interesting because yesterday, everybody was likely back to work, a normal business day on Wall Street. And I think the reason it kind of stalled out is there are people out there wanted to sell going into the Fed Reserve, but they were a little nervous about the strength on Monday, whether it was smarter to do that. And they sold something, and I think they got a little braver last night. So the people who feel like they got to bet on the downside or they got to take some profit, they're getting the job done. The futures are down overnight a fair amount here. So now what we'll see is if that sticks till 9:30 a.m. Eastern Time, we ought to get a gap down in the cash market. And to me, relative to what I think is going to happen in the next couple of weeks, that's actually a bullish signal, okay? Because they're going to have to put it up to fill that gap. And I just think they'll keep on buying and continue to put it up. But on a very short-term basis, that gap can be a bearish sign. There can be some follow-through selling. It could be that they blip it up briefly today, tomorrow, to fill that gap and then just sell it again. So these gaps are always a problem here that I can view them on both sides here, very short-term basis and farther out. At any rate, I think what we'll see if the cash market wants to trade below yesterday's low, and let's see if I can get that price exactly for you. I have 4916.27. If it does that, it will generate downside objectives for 49.05 to 48.97. And that's really the lowest I see. Now, that might discourage some people because it would have wiped out the Monday rally. But it really, when you zoom out, it's really just normal fluctuation. And I think when we look at it, that a level 4 downswing is underway. That's your intra-week, sometimes intraday swings, day-to-day pops and drops. That is down according to the futures. So the cash market is probably going to open lower and come down as well to match it. But it's actually due to bottom today. Now, it's possible it doesn't bottom to the start of tomorrow, the latest. If that occurs, it means they don't like the Federal Reserve, maybe. But I think what it'll really mean is maybe they found some earnings, or they're just nervous over earnings, because I think Thursday is going to be more earnings than any other day this week here, and it has some of the high tech flyers. And they have been a little disappointed with some companies and earnings. There's rising news of layoffs, okay, more companies laying off more. The JOLTS job report come out, and it shows 2 months ago that jobs actually picked up some. And that might have concerned some people. The economy is still too strong. But if you look at it, it's still in its downtrend for a year. It's just a normal fluctuation, in my opinion. And I think the way the market behaved yesterday, I think they finally caught on to that, shrugged that off. I don't think that data really matters that much, okay? But we have that downside potential. And when we zoom out for the level 3 trend, the most important uptrend and downtrend during a month, it's kind of like a monthly buy sell signal kind of thing. The level 3, I kind of thought topped and bottomed last week. That's why I got sucked in with the strength on Monday, and that's still valid. That could still work. And even if they put it down to these downside targets I just gave you, it's still valid. It can still work. It'll go higher quickly, soon. But the model is warning that we may have to shift those level 3 tops and bottoms over to where it topped yesterday, and it's going to bottom today with this level 4. It can get a little more complicated and bottom with a future level 4 going all the way into early next week. But it looks like ideally they'll get it wrapped up this week. And of course, tomorrow we're going to start the first day of a new month. I wouldn't mind a little dip to the start of the month and then put it higher. So my guess is we might be a little off on level 3 and have to wait a little bit longer here, have a little more downside, a little more sideways, some consolidation. But the model is saying we're going to get over this Fed Reserve. It's not going to be any kind of a major problem. We're going to be okay with the earnings and some of this jobs and other economic news this week. And the model is saying next week it should be higher for a level 3 trend. So if it hasn't already bottomed for level 3, it's probably going to bottom today, okay? And maybe just a little later. It just depends on the data and how they feel about the Fed Reserve. Now, if it's higher next week, that's an extension of a level 2 uptrend since January 5th, when we called that bottom correctly for the major indexes. For the other indexes and a lot of data, it didn't bottom till later in January, and I'm fine with that. That's okay. Even the money flow, the breadth shows it probably bottomed later. The active managers index, exposure index, they were actually behind on this one and missed out of some of this upside, but it looks like they're on board and they're buying stocks and bullish. So from the January lows, if you will, the market ought to be higher into late February to early March. The next larger trend is up from October, I think it was October 27th, and is going to be up into late February to March. There's going to be a setback in March, and it may well start from February into March. It doesn't have to, but it may start there. And then we have the seasonal patterns suggesting the market can be up quite well the first 2 weeks of February, but can be down quite a bit the latter half February. And on average, the market topped out about February 16th. I'm a little concerned because of the big run-up from November to now in the stock market, that maybe the next 2 weeks won't be all that nice of a push, because I'm concerned the popularity of this seasonal trading has greatly increased. All these analytical methods, they come and go in terms of popularity. And I think even a lot of the cyclical traders, if they're having problems figuring out all their cycles and patterns, they might just go with a seasonal and saying, well, on average, it goes down this time of year, so we'll go with it, okay? So if we don't have enough fresh news to inspire people to buy, I think there's going to be an increasing number of people saying, shouldn't we take some profits, and shouldn't we go shopping for some of the lower price stocks and do some rotation and change our portfolio a little bit? And why wouldn't we guard ourselves? And the closer they get to, say, that seasonal top, they may start selling a little early and give us some problems. But the best forecast is we ought to start February off quite well. And I'm going to stick with that. I think there's a chance to go to 5,013, but there's a chance it's going to stall out in the 4,900s area. And we have a 49 or something like that as another level to watch here to the upside. So don't be surprised we're getting a little slipperiness and problems here yet this week and early next. But don't be surprised the market bottoms today. It likes the Fed Reserve. It's up tomorrow. It doesn't find enough problems with the earnings this week, and so it's maybe even up on Friday. Don't be surprised it's up next week or two, things like that. I think this is all going to work out. Now, the interest rates, interesting enough, took a nosedive, okay, yesterday and overnight. when we look at interest rate futures. And the interesting thing is they sold the stock market anyways. So it's decoupled, but they're selling everything. And I think it's just technical trading. I think it's day trading. I think it's just the fast traders and people kind of preparing for the Federal Reserve. So I don't think it means much of anything, but it does show the possibility we just put a significant high in interest rates, and I just wonder if they won't go just a tad bit lower or sideways the next couple of weeks. That can help the stock market move higher. So I think we're okay with that. And yet I think the downside is limited in interest rates. And in March, people may be getting nervous over the Federal Reserve, and they may get nervous over any spike in interest rates. So there is some selling coming by March. But I think we got a little more upside at least, maybe quite a bit more upside. I can see this market really surging, but I can also see it just grinding or somewhere in between. But I think there's some more buying coming before we get into that selling. But it does make me nervous that most of the marketplace is thinking they're going to sell someday, and maybe that day is coming closer. But for the moment, I think this got higher to go. Near term, we just got to get through this Federal Reserve that can cause a little slipperiness here. So I've given you some downside potential today, this week, and I've given you some upside potential looking out over the next couple of weeks. And I think it's just really a standard operating procedure right now. The market's behaving itself quite well with an overall bullish bias as it comes into this Federal Reserve meeting, which is viewed as important data. And then we also have some earnings that's also viewed as important, okay? And tomorrow we'll do the weekly update, okay, video, and give you also another audio morning brief. And have a great day. And if I can, later today, I may have a comment after the Federal Reserve. I'm usually a little suspicious of speaking too soon of what they say, because the market seems to do the opposite after I say it. But I may have a comment for you towards the end of the day. But I personally think there's a chance it's going to be higher by the end of the day. But if not, I'm not that concerned about it. I think we probably got higher for early Fed. Past results and on the Syndic of future results. Have a great day. Thank you.